Today I'm going to talk about the latest revision to OCBC 360, and it is a huge increase in rates. This is something you will want to watch if you want higher interest rates for your bank savings. OCBC is claiming that you can earn up to 4.65% in interest rates, and guess what? This is actually realistic. It is not marketing fluff. So let's delve into the details and see how you can get this 4.65% per annum interest rate. If you're new to OCBC 360, there are actually 6 categories that you can qualify for in order to get additional interest rates, and they are the salary crediting, the save category, the spend category, insure category, invest, and also grow category. Now I'll go into each category in greater detail, but the most realistic ones that you should fulfill will be salary, save, as well as spend. For the salary portion, all you have to do is just to credit your salary at least $1,800 per month into your OCBC 360 account, and you can get 2% interest rate on your first $75,000 of savings and 4% on the next $25,000. Now these rates are more than double of what OCBC had just 2 months ago, so it's very good rate, and it's a very easy category to fulfill, so you should definitely credit your salary here. And at $1,800, the salary requirement is actually quite low, so people with larger incomes can also choose to split their income between account like OCBC 360 and then put the rest of their salary at other bank accounts that require salary crediting if your HR department allows for that. So this is a very easy category to fulfill, I think, and you should definitely do it because the effective interest rate on $100,000 of balance is actually 2.5% per annum, which is a very good rate for a bank account already. Next, we have the save category, which is another easy category to fulfill. All you have to do is just to increase your monthly average balance by $500 each month. So if you have $100,000 this month, next month you should increase it by $500 in order to get additional interest rate, and you can get as much as 1.5% EIR, effective interest rate, on $100,000 of balance, and that is more than 4 times of what OCBC was giving again 2 months ago. Now it does make your funds a little bit stickier because let's say if last month you have $100,000 of funds and then this month you need $10,000 and therefore withdraw it, you will no longer get the save category interest because your average balance has not increased by $500. But that's only for a month. If next month you can increase it to $90,000 and $500, you actually start getting back the interest rate. So I think it's still a very good category to fulfill. So if you have $100,000 of balance and you fulfill just these 2 categories, you get 4.05% per annum interest because there is a base interest of 0.05%. And that is an excellent interest rate. And I think kudos to OCBC. This is a very good improvement over the last revision. And I think other banks will definitely have to watch out and follow suit because this is a real rate increase I think no other bank has started to do. And I compliment OCBC for taking the lead in this regard. And that's not all. You can also fulfill the spend category where you charge $500 in eligible transactions to your OCBC credit card and you get additional 0.6% interest. Now 0.6% interest is about $50 a month based on a $100,000 balance. So I think it's a very good rate to have. And I think this will change my spending habit to put spend on OCBC credit cards, because if I charge $500 to an eligible OCBC credit card, I can actually get $50 of extra interest, and that's sort of like additional 10% cashback if you think about it. On top of just increasing the interest rate, OCBC has also increased the number of cards available for the OCBC 360 account. In the past, it was only for OCBC 365. Now they added OCBC Titanium Rewards and OCBC 90N to the list of cards eligible for the spend category for OCBC 360. The OCBC Titanium Rewards is one of my favorite cards, but it doesn't see much regular use because it's usually only used for big ticket items like electronics once every year or so, and therefore it's very hard to put spend on this card every month. The OCBC 90N is a pretty fast free card to use. The earn rate on its own is not spectacular, but if you like miles, I think this is a okay choice for you to clock $500 of spend, get your miles, and also help to clock this category to get you higher interest. Personally, I think this category actually dramatically improves the value proposition for OCBC 365, particularly for those with a larger balance in their 360 account. Because if you're already going to spend $500 on an OCBC credit card, you might as well just spend a little bit more, let's say put additional $300 of spend so that you meet the $800 minimum spend for OCBC 365 card. Now, the OCBC 365 card doesn't really have the best cashback rates. It gives like 3% for transport, groceries, 6% for dining, which is not too bad. But if you are getting additional interest from your OCBC 360 account, I think the 365 card becomes very good, right? It's not just 3% cashback anymore. You actually get additional interest rate. And at $100,000 balance, it's $50 per month. That's a lot more than I think what other cashback cards can get you right now. Once you've fulfilled 3 categories of salary, save, as well as spend, you can get as much as 4.65% per annum interest rate on a $100,000 bank balance. Now, OCBC did not just increase rates for people who have $100,000 to save. If your balance is less than $75,000, your interest rate is also not too bad. For fulfilling the categories of salary as well as save, you can already get 3.25% per annum interest rate. And if you throw in the spend category, you can earn 3.85% per annum, again for any amount below 75,000. And this is an improvement from before, where the first $50,000 didn't really get much interest, and then the next 25,000 get a bit more. Now they've combined into the first 75,000 getting a respectable amount of interest, and I think even people with less than 75,000 would find the OCBC 360 very compelling, more than 3% per annum for an entirely liquid bank account.
This video is brought to you by Moo, and you should definitely sign up using my link below because you can get free shares to kickstart your investment journey and also get no commission as well as no platform fee for a year if you trade on US stock market, and you can also get pretty low commissions if you trade on the SG stock market. Check out the latest promotion with my link below and score yourself some free shares and goodies. Every sign up goes directly to helping me create more content for this channel, and I thank you for signing up, and thanks to Moo for sponsoring this video.
In fact, the OCBC 360 account may start to become more attractive than Singapore savings bonds as well as T-bills because of the attractive interest rates and the fact that this is 100% liquid. You can withdraw anytime you want, unlike SSB, which is limited liquidity, and T-bills, which you need to resell or wait for the maturity. So very compelling choice. Myself, I have put $100,000 into the OCBC 360. It is that compelling. With that, let's move on to the last 3 categories to fulfill for additional interest rates. The first would be the Insure category, and the next would be the Invest category. Now, I remain very skeptical when banks want you to insure and invest with them because their financial products tend to be pricey, which is a relatively weak way of describing their products, and it's a very long-term commitment, and the interest rates that they give you are only for the next 12 months, and they can change it anytime. So you may find yourself locked in a long-term obligation, whereas your interest rate given is at best for the next 12 months, and at worst, they can actually change the interest rate downwards next month if interest rate environment somehow goes down. So I think it's not that wise to buy an insurance or investment product from the bank just to achieve this category. Now, of course, some people are wondering whether or not there are hacks to get these categories easily without actually having to spend that much. And I would say that the Insure category is probably not something you can game because you need at least $2,000 of premium for term policies. So, I mean, if you are buying a term policy, I guess you can go and compare and see whether or not Great Term is competitive against other terms in the market. But again, you need $2,000 per year of annual premium, and not many people need that much protection. Of course, the usual suspects of endowment policies and investment linked policies are found here. So I don't think you actually want to achieve this category at all, even though it gives you additional 1.5% per annum interest. For the investment category, I think there is some potential because the requirement is actually $20,000 in unit trust, and unit trust you can liquidate at any time. And I think the fees of unit trust are not as high as insurance. So you have to see whether or not you can actually get more from the additional 1.5% from achieving this category versus what you will pay in terms of fees to the unit trust. I think there is some potential here. Structured deposits as well as structured products, again this one, okay, do your own due diligence to see whether or not it will make sense for you. Now, even for unit trust, it is an investment and there is potential for downside. So I would suggest you to exercise due diligence and tread carefully. Don't just buy a product just for some additional interest, and then you end up losing more money as a result. Okay, I think I'm going to put investment category into a maybe. Subscribe to my Telegram group, and I will share tips if I find this category easily achievable. Okay, I myself now have $100,000 in my OCBC 360 account, so I will definitely explore and see whether or not buying an investment product can help get higher interest rate without paying too much fees or opportunity costs when we get the investment product from OCBC. Now, the last category of grow is actually quite interesting. If you have $200,000 of funds, you can actually get additional 2.4% per annum interest on your first 100,000. However, you must remember that the next $100,000 of your $200,000 balance does not receive any bonus interest, so it's only generating 0.05% per annum interest. So your first $100,000 of balance will get 4.65% plus 2.4%, making it 7.05%, and your next $100,000 will get 0.05% per annum interest. Now, if you blend it together, your effective interest rate is actually 3.55% per annum, and that's actually still quite decent for $200,000 of savings. Now, to sum it up, if you have anywhere between 0 to 75,000 of savings, you can get about 3.85% per annum interest. If you have $100,000 to set aside, you can get up to 4.65% per annum. And if you have $200,000, you can get about 3.55% per annum interest on the entire amount. And this is just by crediting your salary, by increasing your balance by $500 each month, and spending $500 on one of the 3 OCBC credit cards. Now, I think we must give credit where credit is due, and OCBC deserves all the credit for being the first bank to substantially increase interest rates, and I fully expect other banks to follow suit. So subscribe to my Telegram group to get updates on that. Now, if you're looking for higher returns, I think you'll be very interested in this video that's showing on your screen right now, and I'll see you in that video.